Hello traders, welcome back to my YouTube channel. It is March 28th. It is Monday. We're looking at S&P 500 and mini futures. And because it is Monday, it made me think about that we as traders, we do most of our work during weekends. We go back, we print our charts, we mark them, we learn from our losing trades and winning trades. We try to understand how to draw the key levels, how to draw the trend lines. And we're thinking about the future prospect, the future success. We're thinking about how we're going to grow our small accounts, how we're going to pass evaluations. So we write down all the rules, we make a plan how we're going to trade the next week. And the minute we get to the chart on Monday, a lot of traders, they feel the need and the urgency to put into practice everything they learned during the weekend, to implement all the rules. And they really want to find entry, and they want to really take a lot of entries. But in long run, I find it difficult for traders to make this work consistently, because they're just going to be days where the market structure is not going to offer you possibility to find a lot of high probability setups. Not every single day you're going to be able to take 8 winning trades consistently reliable as a high probability setup. Today was the perfect example, because there weren't that many setups that wouldn't be without any form of congestion, overlap, a lot of stems, just not so clear. There was a quite nice bullish rally at the end of the day, but this happened quite late. The majority of the day was quite slow, confusing, and the minute I saw off the open how slow price action is, I already knew that the day is going to be hard to trade, because it was really slow, a lot of stems, a lot of congestions, and I'm using price action rules to make my job easier. And the way we trade is we sit back and we find the key entry points and we expect for price to get to them. Our job is not to overanalyze and look for trade on every single candle. Our job is to find a predetermined place in the market where the key entry point is going to be located, and then the high probability setup can appear. And once price gets there, we just try to analyze the behavior. Is the setup congested? Is there a lot of wicks? Is the signal bar strong? If all these things are being analyzed, then we can take the entry. But under no circumstances we are trying to find an entry on every single bar. The goal is to try to understand the market structure as a whole. So once we see a price pushing lower like this, the first thing we need to understand, we need to identify the key levels. This is the low for the day and this is the high for the day. The reason why we're trying to understand, the reason why we're looking for key levels like these is because they will come into play throughout the day. This is the key level at the top, which later on ended up being resistance. It is the key level at the bottom, which help you identify where the point of major trend reversal is going to occur. Now we can see that the price is pushing to the downside. Now we have a break and we have a first leg to a new low, pullback, second leg to a new low. As we are coming from the top of a trading range, we expect for price to go all the way down here, because according to healthy trading range rules, this is how trading range is going to operate. We're going to go from top to the bottom, from the bottom to the top, and from the top to the bottom again. Here we have a break, 2 legs down, and we are already starting to go a little bit sideways, and we are already starting to push above EMA. So we can see that there is something changing. There's a potentially bullish imbalance being formed, because we can only make it to the middle of trading range. Take a look how these moves are really steep and strong. This move already played out in the middle of trading range. Now we have a first setup that could be classified as a high probability, because we have a 2 legs to a new extreme, which indicates that the downtrend is over according to trendline rules, and we have push above EMA, and this is the lowest low of this point. So high probability setup is going to be a 2-legged pullback at the key entry point, or failed 2-legged pullback under the wrong context. And since downtrend played out, the wrong context now is to thinking bearish. So once we see a first entry short right here that failed, push higher, and we see a second entry short failure, this is a second entry short, is the 2-legged pullback, but it's under the wrong context. Downtrend played out. So we can take this entry as a failure. But if you take a look, we have 1, 2, 3, 4, 5, 6 bars stacked. EMA is starting to get in the middle of these bars. So this entry is price action wise and the context wise good, but the behavior part of price action and the trading is not the best here, because this is starting to look like a congestion. During failed second entries, market can stall a little bit, but this congestion was a little bit too much. But this is a nice inside bar, which means that it allows you to get more room to these highs right here. So this trade is not a bad entry at all. It's just a little bit too congested. You know what, our market is slightly aggressive. There are so few setups that really this entry is probably one of the better ones, but you know, given the fact that this is an inside bar, allows you to sneak in a little bit back before these highs, and you basically got a little bit more room, and it closed right at the EMA. But you have to take into consideration that this is very congested. Now, if the structure wasn't so slow and the market was a little bit faster, you're better off skipping this trade. Now the market is pushing higher. We see a sideways movement. We have a new high form, and we have a lower high set up right here. But this lower high formed above exponential moving average, and now we have a second entry long. This is the new high. There's a first entry long, pullback, second entry long. I can see that the exponential moving average keeps holding price. The resistance now acts as a support, and this is a two-legged pullback with the direction of a trend. When I was watching this, I wanted to go long above this bar right here because it ticked lower, instant reverse. But on my chart, there is no trigger high. You guys can see above this bullish bar, the second entry long never triggered. It would confirm the setup. Then it formed big bearish bar, and then you got the trigger above bearish bar. Now remember, if I'm going long on a second entry long, I need to go long above bullish bar. We get the second entry long trigger technically above bearish bar, but that doesn't count. I cannot go long above bearish bar, so no entry. And then you get a trigger above this bar right here, but by that time you get the same issue as here. You have 1 2 3 4 5 bars stacked, almost 6. There is a bearish stim at the very top, indicating that at the very end of the bar a lot of people started selling. So this is really no trade. So you guys can see that the market eventually pushed higher. But when market is not giving me indications that it's going to go higher without congestion, I cannot force the entry here given the fact how slow the market is. Remember what is happening here. You have to zoom out and take into consideration the entire structure. You cannot just zoom in and focus on tiny little piece of price action. You take a look that this is a trading range, and you can see that there's starting to be a bullish imbalance form because we are really making series of higher lows, but the highs are being static. And you can try to draw a trend line like this, and I keep beating the dead horse and repeating myself, but it is extremely important. But because I see it almost every day, a lot of traders, they still keep drawing these wide patterns in trading ranges, and you can identify that this pattern is not correct by how much room you have at the top here. Look at how much room you have, and the price is only sticking to this bottom channel. Also, this is really sideways movement. This is long sideways movement. Remember, channels are supposed to have a bias, and price is supposed to be going from one side to another. Here, this is so sideways. These big patterns are just not good in trading ranges. You're better off just sticking to the imbalance, and once market is approaching the highs, then you can be even thinking about potentially selling. As the price push higher, we have a failed breakout. So also we have a break of this uptrend and a new high, and we have a first leg pullback, second leg to a new extreme. So you expect for price to pull back. Here we have a new high of this entire swing up. So when I'm looking at the structure like this, we expect pull back down. I can either see it as a micro double top or large double top, or the way I did it personally, I just still stuck to it as a failed breakout. It really doesn't matter whether you put it like this or a little bit down like this, you basically get the same outcome. From my experience, I figured out that you want to really use the swing that is right here. You don't really necessarily want to always use the highest points. If you use the highest points, you will not get much of reaction throughout the day. We have a new high, first entry long, pullback, second entry long, failure. Now, this failed second entry long on the surface seems as a great entry because it's a failed second entry long, and a lot of traders are probably going to get trapped looking at the trend line like this, and they're going to be trying to pick a long off key entry point, but the structure doesn't allow you for the trend line to be valid. The problem with this failed second entry is because basically the short-term downtrend played out here and had a break and a new low, but that's not the main issue. The main issue is how steep this was, and this was completely 90-degree angle. And when you see such a strong, sharp second leg, you can almost expect some sort of correction afterwards because this was extremely sharp, and these moves are not long-term sustainable. So it barely worked for a scalp, and the context-wise, this is not a bad entry. If you want to go short here, you're definitely following the price action rule, but it's just a little bit this entry is just a little bit aggressive for my liking, given how two big steep moves down we just had. But we're coming from the failed breakout. We expect for price to push lower, and this is a great bar, but overall there is still a bit of a bullish imbalance, and it is just better to wait. You know, remember, you're not forcing entry. You cannot feel the need to take setups. You just have to stay a little bit patient. When you feel completely comfortable, then you even had a break and a new low of this short-term downtrend. If you decide to draw it off the here, bars are going stacked, they're going sideways. Then you have a new low right here. When I was watching this, I wanted to go short on the first entry, second entry short below EMA, but the second entry short managed to form above EMA. And take a look, we push strongly above EMA, then we reverse down. You get quite a big bar that closed above EMA. So unfortunately, the second entry short formed above EMA, not really the great entry. Then there was an entry that was extremely tempting. This is a lower high after second entry short. And this is my favorite setup because this confirms the second entry short. It also confirms that we are coming off the resistance. So now we have a double top, fill breakout, pull back into trading range, another pullback lower. So the resistance keeps holding. And this is a lower high, great bearish bar. But once again, EMA is flat. You have very little room to these lows right here, to this tiny trading range. A lot of stims overall. So not the great entry. It looks all great in hindsight, but when you're watching this live and you see all this congestion, you enter right here and it's going to fail. And right after you have a losing trade, you will go back and of course I knew better. This is a big congestion. I knew that I was not supposed to take an entry. So just because it's working on the day like this, because today is one of those days where even congestion and overlapping setups and choppy setups will work, because that's just how the structure was today. Early, later part, of course, we had a nice rally, but price action wise, you expect for price for this lower high to work, because this lower high confirmed this second entry short and you're coming off the high. So the bigger pattern is confirming the bearish momentum. You're coming off the highs to the lows, and the smaller pattern is also confirming lower high of the second entry short below EMA. Then you have a new high, first entry long pullback, second entry long failure. And once again, you cannot go short after such a big bullish bar. Look at all these stims. Look at how EMA is now directly in the middle of these bars. Now it's really looking like a small, tiny range like this. Very little room to enter. Not the greatest entry. Market is very slow, and the last thing you want to do is to take impulsive entry. So unfortunately, not a great setup just yet, even though you probably feel like you're going to push lower. If you do this, if you learn this habit on a normal day when congestion will bite you, then you can end up having a losing trades in the future. Market had a break, new high of this short-term uptrend. Then market push lower, little break, new low. Market push higher, little break, new high. This is basically now a small trading range. We can see that in the middle of trading range, there's a small trading range being formed. The support is being formed right here. Previous resistance is still holding price. So we're playing it as a small trading range. Okay, we can see that EMA is now flat and price is swinging up and down, up and down. This is legit trading range. Even though there's a bullish imbalance, this is such a long sideways micro trading range that you can treat it both ways really. So once we have a break here, I expect a filled second entry short near EMA. I never get it. There's a break, new high, so I have to switch the gears, because in trading ranges we're going to go lower. We have a push lower, break, new low, and then we have a high-low setup, which is a decent entry because it's a full bullish bar. Look at the quadruple bottom at this support right here. You got still a bit of room to the EMA, and downtrend played out with the break and an attempt for a new extreme, which in this tight trading range can be enough. So the first decent high probability setup, higher low of the quadruple bottom, and then you have this uptrend played out with the break and the new extreme. So according to trendline rules, you no longer are expecting to move higher, because there's a break, new high, and there are two legs up to new high, and we have a new low form right here. This high is higher than this, so we have a first entry short, pullback, second entry short. So this is a two-legged pullback to the key entry point, and the reaction is great because the bar is very bearish. So this is the decent trade as well. I wanted to go short here on a lower high, or we can treat it as a micro filled second entry long, new high, first entry long, second entry long, failure. I'm not going to mark this because once I reloaded my data, this signal bar is even bad. When I was watching this, the bearish body was a little bit lower, so I didn't have such a big stim at the bottom. I really had quite a substantial bearish body. I wanted to go short here. Unfortunately, I didn't get filled. It would have worked for a quick, easy scalp. I think it would have worked for 9 ticks, but I would have gone for 6. When I see such a small trading range like this and slow market, I still would have went for 6. When I see this bar right here, I cannot mark it, but with the better bar, the EMA still keeps holding price. You never push higher, and this is quite a decent entry. Now, this is the trade that I took for the day, and I took 6 ticks on this, barely worked for a scalp, because I decided to have enough room to the EMA. And what I was looking at is, I'm just going to delete this like this. I'm looking at this, I'm treating this and playing this as a trading range, and a healthy one, because we're swinging up and down, up and down. I have a strong move down, I have a break, And now I have a legit new extreme form for this initial move down. Also, this is a quadruple bottom and this is the first break below. So this is a failed breakout and this is a big bullish bar. I really expect it for price to push higher. This is a big bar, so you either want to enter with the limit order further back, or you really want to make sure you have enough room to these highs, because as it is forming higher and forming higher, you're getting very close to the EMA, so you have to be close. Barely got out, and I really expect the price to push higher, but eventually it reversed. Then you get quite a decent second entry short, but I don't like going short into these lows. As the price is finally breaking lower, okay, you have to zoom out and you have to take into consideration what the entire structure is. Remember, the key levels you draw at the early part of the day, you keep them as target as they will come into play. So once you see price breaking down here, your goal is to reach this support right here, and then you expect for price to do what? To reverse back up, unless price keeps continuing pushing lower. But you're playing this as a bigger trading range. Just like this range, you're buying low, selling high, you're doing the same thing on the larger scale. So as the price is right now pushing lower and pushing lower, there's the short-term downtrend, there are 3 confirmations. This downtrend is still in play. I cannot take second entry short so far away from EMA. Price bottomed out below the key level, so you probably expect for price to push higher, and you're far away from EMA. You cannot take a failed breakout or high low just yet. Why? Because this downtrend is in play. You have to respect the trend and you have to respect the rule of the market only after you have a break and a new low. That's how you get the information that you can safe look for reversal. Here we have a little bit of an advanced setup that I want to talk about, because we have a new low form right here. We have a first entry short pullback, second entry short failure. Normally you want to take failed second entries above or below EMAs as a reversal pattern like this one, but this is a great advanced entry. If you are far away from EMA and you know that a lot of traders are going to take second entries so far away from EMA, especially in trading ranges, when you combine the fact that you're far away from EMA and you're combining with the fact that you're probably going to push higher because you're expecting for price for the breakout to fail, this is quite advanced entry. You have to really know what you're doing, but these setups are reliable as well. The same thing to the upside. If you break to the upside and you get a failed second entry long far away from EMA, you know that a lot of traders are probably going trap and you're probably going to pull back higher. So I'm not going to mark it, but this is a great advanced setup. Price broke higher. Once we push below EMA on a big bar like this, I was expecting to get a lower high, second entry short, never triggered. By the time you get lower high, you already form a new low. And if anything, if you're watching at this, you're probably looking for major trend reversal. How do we identify major trend reversal? We cannot just start to pick bottoms right here. You never know how many pushes you're going to make down. Take a look. There's additional move down and a second leg to a new extreme. You just don't know, okay? So the major trend reversal is going to be set up by a reversal pattern. Reversal pattern is characterized by 2 failed attempts in the previous trend's direction, and it has to push above EMA in this instance. So we have a new low, first entry short, second entry short. So previous trend's direction was bearish. For reversal pattern, the previous trend has to play out, which it did, break, and we have a 2 legs to a new extreme. So we have 2 failed attempts, we have a 2 legs down to a new low, so the downtrend played out. There has to be a push above the exponential moving average for this to be a legit reversal pattern. Take a look at the signal bar, nice bullish bar. EMA keeps holding price, and the key level you marked at the start of the day keeps showing you and indicating that it is holding price. This was probably the cleanest and the best entry for today. So if you took just this one entry for the day, you did good, because all of these setups are really hard to mark and really hard to see real time. Once you see price pushing higher like this, of course you first have a trend line like this. You have a small break. I wanted to go long on this second entry long, new high, first entry long, pullback, second entry long, but by this time it formed, it's again right into these highs. EMA keeps holding price. I really want to go long here. Unfortunately, by the time you get break above, also a little bit stalled with the bearish bar, so no good entry right here. Then market is going sideways. You have a little bit of a failed breakout, but I don't really like calling this failed breakout, because proper failed breakout is going to close outside with the body, not just the stem. I mainly marked it as an example purpose because a lot of traders, I looked at their chart and they had a small bar at the lows like this. This bar, with the way it's formed on my chart, it's already quite in the middle of this congestion and it's close to the highs. If you have a small bar at the very lows, you can see how the support is holding. You just touch the EMA instead of reverse. This is a good sign of a bullish momentum, but I really prefer a better bar like this. And then from the perspective you're watching it like this, you have a break, new high form. So once I see second entry long right here, I really am respecting a new extreme. But we have a 2 legs to a new low, break, new low, key entry point keeps holding price. So this is not, bad entry as well, but you're expecting to break any new extreme at this point on. You're following trendline rules, and by the time market keeps only pushing higher, you're creating so many moves to a new extreme that you have to find there's probably a bigger pattern in play. And unfortunately, the strongest and cleanest rally with a couple of good second entries happened at the very later part of the day. So first I identify the big bias, the big pattern. Then I try to follow the small trend lines, the small patterns inside of the bigger one. And lastly, I'm paying attention to the behavior of the setup, whether it is overlapping, whether it is clean, and whether it is having a good decisive signal bar. So I'm going to see you guys in the next one.